Welcome to the channel, Trader Jan speaking. We have the 2nd of April and this video is about a review of the trading day from yesterday. I had 110 ticks plus. It was a day of a lot of announcements and I did how many trades? 1, 2, 3, 4, 5, 6 trades. And I like to get the learnings out of it and go on from there. First of all, we review the locations which we defined in the morning and then reviewing the trades. I'm currently in a trade. As you can see now, the trading day is going on already. It's Asia time. It's 20 minutes after midnight Chicago time. This one is my trading chart. I trade on a 200 delta chart with the others platform. And the day so far, this colored background here, that's the Asia session. So it went quite well down. But let's see at the locations first. I'll check with the 15 minutes chart. We talk about this area here. That's what the day was yesterday and checking the locations. So the assessment was done at opening at when the European session was already running, so around this time here. So this location here, shouldn't be a surprise that they match. But further in the day, they still matched quite well at this one here as well. If we go up here, then went down here to that location, straight up to this one, and we went down to the daily previous high of the day and then pushed back. So on the 15 minutes chart, it looks all not too bad, that I can trust my locations to look for trades over there. The different colors here, they show me the different sessions. It's the Asia session, European session, and the American session. So that's about the 50 minutes charts and the locations. Now let's check the trades from yesterday. I mark those trades. That's my way of reviewing my trades. I'm gonna do the trades. I mark them here with those blocks. That means on the left side is like when I opened it and when I closed it. The color in the background indicates the direction, like it's blue when it's long trade and it's gray. I think I did a trade in the morning, but that one, and I left the markers from the day before. Here, this one was one of those where I did the short trade, and the outer boundary means if it's green, it was a winning trade. If it's red, like these ones that was the day before, it's a losing trade. What I learned from the day before, actually, that it was trading far too much, far too hectic. So I tried to apply that one in trading day yesterday. When a trade was closed, I breathed first and then I tried to reanalyze and check what the situation and how could we go into a new trade without being too hectic. So now for the current day, for yesterday for the trades, I had the trade in the morning. That was at the start of the European session. That's where I saw like a general coming up, and then that was a strong high here, which was a resistance first, and then a support. And then the VWAP came in addition. So my kind of speculation was, okay, that's could be a good long, even though it was high risky because price action speaking, price went down, got resistance here, went down, but it was a VWAP. And during European and Asia session, a VWAP is usually a good indicator, a good location to trade, and it coincidentally matched with one of the locations. What I didn't do well here though was I got too nervous. It went against me at some point. My standard stop loss is 100 ticks, and then I should have let it run until the next location. So learning number one, if you enter a trade at a location, know your stop loss, but know your take profit as well, which should be the next location. So other trades here, I went into a long here as well, so I only did long trades yesterday. I went into a long trade here. It was based on this high here. When the markets here shoot over and came back, and then I entered here and like wanting to go out at next location, but the market turned against me. And with my 100 tick stop loss, it went at 170. I mean, it might be a little bit, the view is, I think, quite good to take advantage of. So here, that was a loser, it went against me, and then I went out with minus 75 ticks actually. Even though I went in here, but I moved my stop loss to below that point here. So because I knew if it runs against me, then I don't need to wait for my 100 tick stop loss, which was a learning from the day before. I should change my stop loss if I know my setup is not running in my favor. So here, market went down into the range, and then the kind of speculation was, okay, if it's running out again, if it's getting rejected from the middle of the range, it might go well up as well, which it did. The sad thing, so here, I think I should have waited until the next higher low has been built. Here, short-term price action here, definitely short. Long-term price action is long. So I'm waiting for the next higher low, like this entry candle here. I think that would have been a better one. And then until the location, which I didn't do, I have standard take profit of 200 ticks, and I guess hope took over. So I entered here, and then I exited here at my break even. Luckily, I didn't move any stop loss. Luckily, I didn't. I did change to break even, so that one was a 1 tick plus. But actually, in real terms, I should have let it go at the next location. So, having said that, this one here was a range trade. That's where the market came out of that range here. Came out of that range. The colors in the background, by the way, it's coming from my market map indicator, which where I can see the actual traded volume, and it's a heat map, so it's adapting to whatever you see on the screen, and that way, even in the review later on, I don't need to rely on the volume profile from the day. That's the whole day. But I see what I saw at that point in time when I was trading. So here I went out of it went out of the range, and I said, okay, let's get into that one when when it comes back into the range. So I think I started here and finished here in the middle of the range. So my um, that was about, yep, about here. So the theory there is range trading. You get in the edges and you go out in the middle or at the end of the range. In that case, obviously here we see I should have done to the end of the range or even higher. Um, but that in the hectic of the day, I adjusted my stop loss in the middle of the range. That was the safest to me. The trade went already against me here for getting back into the range. Getting back out of the range went already against me, and I was already kind of nervous. I was actually happy that it's came back, and here you see the upper deviation one from the VWAP. That was then the location which I took. Sure, we don't know what happens, right? So then the next one was a little later when I speculated a return, a dip into the range, and then back out of the range. And it went deep enough into it, and this is the upper deviation here from the VWAP here. It touched here. So I went into the trade from here and went out over there. Um, yeah, so I let it run until the location, and then it was good. Here, another one. That was my last trade yesterday. So the price action is long. The, even though it didn't cross, it didn't create a higher high here. And they had a kind of a short-term price action lower here, but then there was a big spike of move with not a lot of volume. So I thought, okay, let's go in here with a 200 delta moving that far is quite a good sign of a return. And then I let it go until it came back to the upper deviation here. Then after the facts, you see, okay, I should have let it run until the end of the range or to the next location. So overall, I think pretty happy with the trading, even though it's, let's say, just 100 ticks or 110 ticks. Yep, 110 ticks. Those are that's the Excel sheet where I'm tracking the trades. Those are the trades I took. Overall, 110 ticks was smaller take profits. If you look at my numbers yesterday or the day before, that was, let's say, different numbers. I guess I was a bit nervous because I had 2 consecutive losing days and I wanted to get in a winning day. So that's, by the way, that Excel sheet is actually being written automatically by my account statistics indicator. With every trade which is closing, it's writing down the trade. It's adding a line here um, with the latest trade. So I don't rely on any numbers from within ATAS. They're recorded well. It's not a problem, but I want to have them separately so I can do my reports outside. And that's an Excel sheet, or in a CSV file actually, which is being written. And that is this little thing up here. Oh, I'm currently 30 ticks in profit. Okay, that's not too bad. With the trade which is open, I've got take profit in 162 ticks, and the stop loss at 90 ticks. So that's what is showing me the current performance. And that is the account statistics indicator. That's that one here where you can show like, okay, show the values in dollars or in ticks. I prefer ticks. Dollar values make me nervous. And then you can see any kind of columns which you can add or remove. You can say commission as well. And then here, that's the export mode. I can trigger an export right away right now, or here that one, I just have that one on. Auto export, live save. This is with every trade, it is going to report it out. So this is a short deep dive into an indicator which I find very useful for monitoring my trades and reporting my trades. I think reporting is extremely important when you want to review what you have done. Anywho, that is about review of the trading day. And with that one, I'm gonna leave you and wish you a wonderful day. The next one I'm gonna do is the preparation for the market, markets morning preps, so I know what is the plan for the trading day and what should I actually be trading based on the locations which I find. Okay, see you then on the trading floor.